Welcome back, Alpha Hunters. Hope everybody had a great and fantastic New Year's. The markets are closed for the week of January the 5th of 2024. So yes, the first market outlook video for the new year. All right, we had a nice gap down this week, and not too unexpected, right? If you kind of saw last weekend, did some homework, kind of expected some selling to come in at the beginning of this year, as I thought a lot of people were just kind of waiting and taking advantage of the last 2 months of last year. All the momentum that kind of built out, was probably no immediate reversal coming, and they could probably just wait till the beginning of this year and, profit take. Now you don't have to pay your taxes on your gains that you've made until next year. So, yeah, just kind of made sense that we saw some selling come in to the beginning of this year. So we had a nice little gap down. It had a nice little rally there midday on Tuesday. Nice little rollover. Very strong pump at the end of the day there on Tuesday, but it didn't even matter because Wednesday come out, gap down, traded lower there that first hour or so. Nice little trying to chop, make a basing pattern, trying to bounce there midday. Nice little bounce here, right here in the middle of the part of the day on Wednesday. And really what this kind of was the FOMC minutes came out, and so you got some volatility, some market reaction kind of going on there. Then basically just kind of rolled over there for the rest of the day. Thursday, nice little lower open, nothing crazy though. Nice little trade higher there for 2 hours, and then we just faded down the entire day, slowly just kind of breaking down, getting down to the daily lows there. Friday, a little bit of a flat open, traded higher though for the first 2.5 hours, first 2.5 hours, hour and a half, and then rolled back over, back down, kind of bounced, and then rolled back over. Nice little pump there at the end of the day, and off of the Friday lows, off the weekly lows. So what we kind of got throughout the week here, I'm not gonna cover this later, but we just got a lot of lower highs coming in, right? Just lower highs constantly coming in, and that was just kind of the theme of the week. Like any kind of rip or any kind of bullishness, sustained bullishness that we got on the market. I mean, people just took the opportunity to sell and lock in profits. And if you know how the Qs performed, big tech performed. They were trash, especially early on in the week. Go check out big tech on Tuesday. You'll see a lot of things got hit pretty hard. A lot of profit taking. A lot of people locking in those gains that they got from 2023. All right, take a look here for that sector rotation. Just kind of mentioning, right, that big tech. You see here the XLK got hit first early on in the week. Tuesday getting hit pretty good. Lowest, biggest laggard right there for the week, XLK. XLY also underperforming pretty good. Industrials, real estate also underperforming. Materials barely squeaking out a weekly gain there, or weekly outperformance, I guess, against the SP 500. Communications outperformed okay. Staples, financials, energies, utilities, and healthcare all outperforming there. So if you go back to like the middle of last week, let me see, I'll just kind of zoom back out here. Yeah, that'll work right there. Since basically the open on the 28th or so, right there on December 28th, you can see utilities and healthcare have been performing very, very, very well. And what hasn't been performing well, once we get to the new year, discretionary and tech. So yeah, I'd be a little cautious as we started to see some things switch out last week, and it just accelerated into some of that switching that we were seeing late last week. Really kind of happened even faster this week. I'll go through the rest of this pretty quick. I'm not going to cover a lot of different things because I did a lot of different stuff last weekend, kind of talking about expectations going into 2024, and a lot of it kind of was talking about in some of those videos. Kind of mentioned a lot of that, and kind of a lot of that did play out this week. So I'm not going to go into a great deal of depth here today, but we'll look at a lot of the basic stuff. VIX. What was very interesting here on the VIX this week was we had a pretty good top here around 14 and a quarter over Tuesday, Wednesday, and Thursday, and I was kind of thinking that we're about to see a pretty good jump here on the VIX. It looks like we're about to break down on the SP 500, the market. And what was really interesting, if you look at what the SPY did, well, we didn't really break down, but we had two back-to-back days of upper retests there Thursday and Friday up into that 10 EMA. And the VIX, what was really kind of interesting when we were talking about on the live stream was the VIX dropped off. And it's one that, well, if we start to roll down and break that support level of the 20 EMA on the S&P 500, be curious to see what happens here with the VIX. Does it start to spike really soon because it dropped off, on Friday? Or the other scenario is the VIX front leading, and maybe we're going to see a bounce on the market coming in to next week. So that would be the only two things I would say. The VIX dropped. Maybe it's front leading because it did bottom before the S&P 500 topped in December. So it's going to be one of those two. My hunches would be to probably just be bearish on it. And if we do run up climbing, most likely we won't climb at the rate that we would drop. And I think that would be an opportunity to see if we are turning bullish. Then you could probably just close out a loss or move down some stop losses or something like that if we don't roll down bearish. But the way the VIX performed on Friday definitely could give you a pretty good rationale to see a pretty good drop here soon. The DXY, the dollar index, nice big old fat doji that came in on Friday. This is a lot of the data that we got on Friday. Nice rebound to start the week, Tuesday and Wednesday. And I was kind of thinking if we got back over this high that we had on Wednesday, we would probably just be moving higher. But it was just all the data that we got on Friday just wound up whipsawing this thing. So the one thing I would say is you could basically play this doji. If we break down below the lower end of this doji or the upper end of this doji, basically just take in that direction. Gold GLD ETF, nice, nice little big old fat upper wick that we got here. Is nice hammer candle, and not gonna say I would want to be bearish on that. A lot of that has to do with what the dollar does, dollar pre-market. You gotta also take into account what the gold futures do. The other thing is I would say is any kind of pullback, I'd rather be bullish rather than trying to be bearish. This thing has performed very well even when dollar has been up. This thing has held up. You can just look at Tuesday. The GLD gold was kind of flat, not really doing a whole lot, right? And the dollar was screaming higher on Tuesday. So I would be much more willing to be bullish on any kind of pullbacks here on gold. And eventually we'll break above, like 193 or something like that, and we'll just be off to the races for the year. All right, take a look at here at the 10-year yield, and yep, nice move here. Kind of looks like the dollar. Nice move higher on Tuesday. Didn't really hold. Wednesday didn't also hold, throwing some upper wicks there. Thursday, kind of a full body, kind of holding up into those upper wick areas, and then there you go. Friday getting a nice little breakout. Kind of a little bit of a doji action. So kind of coming into the lower parts of this. Probably rests here for a day or two, and then maybe continues higher, maybe up to the 50 EMA. It made a pretty good move. It made a pretty good move. 2 months, just kind of straight down. This thing is going to bounce around a little bit, and don't think it's just going to continue to drop off. So just give it some breathing room. Nothing crazy, but a lot of things right now seem to be kind of going counter trend to what the last 2 months were kind of doing. All right, 10-2 inversion. Nice huge upper wick there on Tuesday. Continued to kind of drop pull back there on Wednesday. Thursday kind of got back on its horse, being supported by the moving averages, different things. Friday bouncing up. Highest close that this thing's had, going back for, to the early parts of November. So this is the nice little basing action here. Just take a longer term view here. We had one of these back in the summer where it had a kind of a multi-month kind of base out. Kind of looks like that as well. So kind of mentioned this on the live stream this week that if we got back above this upper wick that we put in on Tuesday, that this thing will probably just be climbing. And with how much this thing climbed on Friday, we might start to see some bearishness really coming to the market sometime soon, because as soon as this thing gets to positive or back to positive, then it's going to be game on probably for the market. That's typically what the history says. That's when we usually get that bearish. I'm not going to go through all the different bonds here. I'll just take a look at the TLT. Kind of all of them kind of look the same. Didn't hold breakouts kind of at the end of last week, the very end of last year. And yeah, we had a nice little gap down. Yields went higher for the week, so just expect bonds have gone down. Nice huge upper wick here. Now look at this on the TLT. We got a lot of room here, back down to that 50 EMA at least, or maybe even down to some of these lows. So yeah, we got some room to move. That's what I'm saying. And maybe we do see those yields kind of continue higher. Kind of makes sense. What's all that gonna have to do with the stock market and equities? Man, it's gonna be really tough. There was a lot of things. I was kind of mentioning that earlier this week that they were starting to see a lot of bearish setups out there on a lot of different bonds or yields or dollar stock market, whatever. There was a lot of bearish setups. There was a lot of bearish setups in financials on Thursday. So yeah, it's one that everything, all the dominoes are kind of leaning towards. Maybe we do tilt over bearish here for a little bit, maybe a couple more days before we see a pretty good bounce. And with the way the VIX kind of fell off, maybe we do see a couple days of it. All right, taking a look here at the RSP. The RSP's actually held up okay, I guess. Okay. Tuesday it did pretty good, but Wednesday it dropped off pretty hard. Thursday it's been all right. Friday it was all right. But yeah, that day on Wednesday, was definitely the worst day of the week here. The one thing I'll say is I still would much rather just be exposed to the RSP and IWM over the Qs. Okay, now you can make a case for the DIA, and we take a look at the DIA, and the DIA has been pretty good. Typically, DIA is not the one that leads the markets, but it does mean it. I mean, it will have periods of strength, right? There are periods and times where it will outperform. Everything else, kind of as far as the Qs and SPY are heavily weighted into big tech. Well, the DIA is not, right? The DIA is more heavily weighted into really just one stock is UNH, and then there's a couple others like Apple and Microsoft, but they have a less weighting. So it's a little bit different weighting here. It is one that maybe healthcare does kind of help support the DIA a little bit going forward. And we've seen healthcare do very well here the past couple of months and even to start the year. So maybe that's one reason why the DIA is actually holding up pretty well, having broken that 10 EMA down, just kind of hanging on to it here the past couple of days. Taking a look at the IWM. Now, the IWM on Tuesday held pretty good. I mean, it was down. Obviously, last week on Friday it ended pretty poorly. Tuesday, it wasn't down as much as some of the other major ETFs, but man, Wednesday just came out and got just smacked. So we finally filled this gap from mid-December on Friday, but it's throwing some pretty good upper wicks here over the past 2 days, Thursday, Friday. So as we go into next week, I mean, there's not much in between our current price level and that 50 EMA. And we do have at least some support resistance kind of pivot points, but I mean, they're not really major ones. So maybe we do pause there for like a day and then we continue lower, something like that. It's possible. It's kind of a tough one. I would still, I mentioned it with the RSP, just rather be bullish on the IWM compared to the Qs. Speaking of the Qs, 2 back-to-back days of upper wicks looks pretty bad, especially when you take into account the beginning part of the week was pretty bearish. The end of last year was actually started out to be pretty bearish. Gapped up last week on Thursday. Friday continued to sell down, bounce off the 10 EMA, but then Tuesday, big time, big tech route on Tuesday. A lot of people locking in profits, doing it in this tax year rather than last tax year. So now you got a situation where you're kind of in the middle of no man's land. You're kind of consolidating here before you got to this level around 394 or so, 393. And if you consolidate here, usually you're building up the momentum to make it through that price level. And then you're probably just coming down to maybe the 50 EMA or maybe even, this price level back over here from July around 387. So Q's big tech has just not performed well to start the year. So right now the way things kind of seem like we'll probably continue to see some bearishness come into the market. Take a look here at the SPY, and nice little gap down there on Tuesday. Kind of tech biggest weighting here on the SPY, so it's going to look kind of like the Qs, but continue to trade down there Wednesday, Thursday. Nice little upper wicks here, right, on the Thursday, Friday time frames, up into that 10 EMA area. Now, we are holding a couple days here under that 20 EMA, and I know a lot of people watch that 20 EMA, but here's the thing is now we've got 2 days, back-to-back days under it, and we tried to bounce in 2 days in a row. Those bounces got faded, and we've made lower highs and lower lows throughout the week, and it's not like we ended towards the upper end of the candle on Friday or the price action on Friday. So we do have a pretty good pocket here back down to that 50 EMA, and that would also coincide with that top that we had back in July. It'll almost be about that same price level. So we could definitely see continued downside, especially next week. And I'm kind of curious on how that would look, especially when you factor in the VIX and how much that VIX fell on Friday. That VIX fell off, man. I was just like, ooh, that is not good. So it's like one of two things is about to happen. Either we're going to bounce on the market, which maybe we do, maybe we don't, and the VIX kind of is in a sideways choppy range for now, or we're going to break down on the market. People aren't going to panic yet, and then we're going to see further downside, and then people will panic, and then we'll see a bounce later on. But the base of for how much the VIX fell off today, basically what my point is we could see the market easily break down because a lot of protection, or the fear index as it's called, a lot of the fear kind of came out, right? So yeah, it's going to be an interesting one to see how it kind of goes next week. Kind of mentioned on the midweek video on Thursday that we could see a breakdown on Friday or Monday, and maybe we still see it happen on Monday. It just, I kind of thought it would be Friday or Monday, depending on the data on Friday, how the market reacted. The market initially reacted pretty strongly. We bounced, and then it just faded throughout the day. So yeah, we got a pretty good amount of room that we could definitely pull back to. So this is definitely different fib levels. We haven't even come back 24% yet. So yeah, we got different levels that we haven't even gotten to as far as like that are important fib wise. And one that would be really, really important is the what people call the golden pocket around the 62% level, which would coincide with this top that we had back in mid-October. So we're already starting out this year really interesting. I can't really think of a time period where we started out this year where we like sold down as much as we have. And so one thing that you got to kind of ask yourself is, why are they selling? If we were supposed to be bullish, everybody was bullish on the year, right? Remember, everybody was bullish coming into the year. Well, why are they selling so quickly into the year? And I think a lot of it has to do with people kind of wanted to sell last week, but they probably realized that, hey, there's enough momentum in the markets that the market could hold up enough to where we can get to this new year, and then we can lock in a lot of profits. And they probably realize that the market's pretty overextended here, and we're probably just going lower. So Alpha Hunters, have a great weekend. First week in the books. Alrighty, take care, Alpha Hunters.